Hey there, investors. Welcome back to Shark Investments, where each week I help you identify quality stocks for your further consideration. This week we're looking at Value Line Issue 11, and we're going to start out with the apparel, the auto, the retail, and the shoe industry. There's some really interesting names here. Come on, let's go swimming with the sharks and see what they got to offer. All right, folks, we're going to dive right in with the apparel industry. VF Corp, ticker VFC, their yield is 2.8%. As a reminder, that is filled with gold because I use the Dow Jones Industrial Average yield of 2.6% as a benchmark. All the data we're going to talk about in this session is valid as of the 25th of January. We can see that VF Corp is qualified as a Div 0. So that's 17 years of increasing dividends per share. Here's what that looks like on the long-term trend, the cash flow and earnings line moving in the upward direction with a couple of hits here and here. Dividends increasing smoothly along. Here's what that looks like on the year-to-year change. We're going to move into the automotive retail industry, AutoZone, AZO. They do not pay a dividend. And you can see that they are qualified as a cash flow 0 and an E0. So not an income play here, but maybe they are a growth play or a value play. Here's what that looks like on the long-term trends, so not a bad curve there for cash flow and earnings. And here's the year-to-year change. So some of you might find an interest in the AutoZone. All right, moving over to retail, we jump right in with COSTCO. COST as their ticker. Their yield is 1.2%. You can see that they are not qualified for cash flow. They are an E1s, so 17 years of increasing earnings per share with the exception of this 08 to 09 time frame when they went down, and a Div 1. 17 years of increasing dividends per share with the exception of over here, this 02 to 03 time frame. So of course next year, if they keep on delivering, they'll become a Div 0. That's COSTCO. Here's their long-term trend. Cash flow and earnings not bad, moving along there, but we got to think about what's going on here. And then here's the year-to-year change. Now we go to Dollar Tree, taking a very different approach to the retail market. Dollar Tree, they do not pay a dividend. So you see the big ugly yellow bar here. They do not pay a dividend. They are a cash flow 1. Cash flow 1. Dollar Tree's been in the news along with the Dollar Store, Dollar General, on what happens when they set up in places. So you may want to check up on them in the news, but here's their long-term cash flow earnings trend lines, and here's what that looks like on the year-to-year. Target, or as some of my friends like to say, Target. All right, Target TGT is their ticker. They are yielding 3.8%. They are qualified as a Div 0. So it looks like Target's trying to take care of their investors, their shareholders. But you really got to take a step back and ask yourself, am I comfortable investing in brick and mortar stores? Or is Target doing it right? Have they found that balance with brick and mortar and online sales? Here's their long-term cash flow earnings and dividend trend lines. And here are the year-to-year changes. followed quickly by Walmart, WMT. Walmart yields 2.2%. They are also a div 0. Here's Walmart's long-term trend line. Not looking quite as good as we saw in Target, so this kind of should be concerning to folks here, this flattening out. And here's what the year-to-year looks like. All right, we're going to shift gears now, go into the shoe industry. Yes, the shoe industry, and the only one to make our list in the shoe industry is Nike. NKE, Nike yields 1.1%, but look at this. They are a cash flow 1, an E1, and a div 0, excuse me. So that means they are banging on all cylinders there. Here's what this looks like in the long-term trend with the cash flow, earnings, and dividends per share. Now, granted, the dividend per share isn't anything to really write home about, but I don't think this is really so much of a income play as much as it's a play for another type of portfolio. Here's what that looks like on the year-to-year change. Now, folks, I'm going to wrap it up here. We're going to do another session in a few days where we're going to cover the retail hard lines industry, the retail soft lines industry, and electric utilities out west. I want to keep these to a reasonable time frame, so we're going to hold up right here, and then in a few days we'll hit the rest of the companies that were included in the Value Line Investment Survey issue 11. And again, I encourage everybody to go check out valueline.com to see if there's something there that would be of interest to you. Have a great day, and we'll chat with you in a couple of days.